Hi guys, it's me, Hannah Wilson, Realtor with Sluss Realty, and I am here to talk to Amanda Ferguson with Union Home Mortgage here in Norwalk, Ohio. So, without further ado, let's get the real expert advice from Amanda. Tell us about yourself.
So I am a loan officer with Union Home Mortgage. I have been here for 7 years. My background is in nursing, but I decided to flip the script, and what started as just a job to fill a void turned into a passion.
Cool. So what happens in the first phone call to you? What are you asking for?
So basic information: name, date of birth, address, job history, banking history. I really like to have people have documents ready so that I can do a pre-approval versus a pre-qualification. Pre-qualification, I'm going based off of their information that they give me, and then a pre-approval, I'm going based off of the information with documents. Once I see those documents, that kind of changes everything, because then I can confirm what they have told me. And sometimes with pre-qualification, we have to do it quick, it may make or break. So it's not something that I always require, but I do prefer to have it within the first 24 hours of having that first phone conversation, so that I know for myself and your realtor that you are good to go.
What information or documents are you talking about?
So, last 2 years of W-2s from all jobs, not just current. Last 2 months of bank statements. This way we can have an idea of what everything looks like. We're avoiding large deposits, things like that. Any divorce decrees, child support information, bankruptcy information, really anything that gives us your history and your story.
Should clients talk to you 6 to 12 months before they're considering, or no?
Yes. Credit's good for 120 days, and we need about 90 days to 30 days.
We hear FHA, conventional, USDA, all of these, VA. What are these terms? What do they mean, and how is that going to affect our clients?
So FHA, VA, and USDA are all government financing. You have your VA buyers, if they're qualified and they've been in the military and the military duties have been done, then they can qualify for VA. That is a zero down program. You can put a down payment down, not required. FHA, 3.5% down. They're a little bit more lenient when it comes to a buyer, but they're a little bit more picky when it comes to a property. USDA, no money down loan program, follows FHA guidelines for the most part as far as property goes, but they're a little bit more picky too on the buyer, right? So it all just depends on that buyer and their history and what looks best for them as far as the loan program goes. And then you have just your standard conventional, which could be as low as 3% down all the way up to whatever you prefer. Some people do 75% down, just all depends.
Okay. And as much as it is client focused, it's definitely property focused as well.
Absolutely. There are renovation loan programs out there. And if you have those renovation loan programs, you can do FHA and USDA. And those are something that we could keep in mind. So if the property may not pass FHA, but we have an FHA buyer, might be something that they could do.
Amanda, what does a government financed loan mean?
So it just means that the government is offering an insurance, let's call it, for us to lend. So USDA has their guarantee fee that's included in, and then FHA has their mortgage insurance that's included into your monthly payment as well. Basically, it's just an extra security that we have as a lender versus the buyer, if that makes sense.
Okay. So you mean like they can kind of dictate what property that they're going to give you money for?
Yes, kind of. Yes. So
Amanda, you're telling me that the government-backed loans, they can determine what kind of home you're buying?
Yes and no. So the condition of the home, yes. And that's with any mortgage, really, right?
True.
They want to make sure that our collateral is enough to loan, right? And to lend on. So peeling paint, broken windows, handrails on steps, those are all things that we're looking for when you do the government-backed financing. And the house does need to be in decent shape, but it doesn't mean we necessarily dictate what you can buy.
Correct. It doesn't have to be in brand new condition.
Right.
It could be, that'd be great. But it doesn't have to be in brand new condition, and it doesn't have to be in the best repair.
Correct.
One thing that I found really interesting in our region is the USDA regioning of where the USDA loans apply, where you can use them, and where you cannot. I found it interesting. So can you help me explain to everybody why we can have a USDA approved home in one town and not in another one, but we're about 5 miles from each other?
Right. So it goes based off of population. So higher populated areas, Sandusky, doesn't qualify. But you can have a Sandusky address and still qualify for USDA. So if you're Perkins Township, so let's say you cross Perkins Ave heading north, you no longer qualify for USDA. Perkins Ave heading south, you absolutely qualify because you're in Perkins Township, right?
Make it make sense, Amanda. Make it make sense. So because we're crossing over into the township instead of the city limits.
Yep. So you are in Sandusky proper, which disqualifies you from a USDA loan.
If you're up by the lake, downtown area, that's Sandusky proper if you're talking in real estate world.
Yep. And same with Vermilion. Once you hit Vermilion proper, you no longer qualify for USDA. And it goes based off of that population amount. But if you're Vermilion Township, you do qualify. City that does qualify for USDA is Fremont.
Really?
Yeah.
Based on its population, it qualifies.
It qualifies.
Very interesting, because to me, Fremont is similar to Sandusky.
I agree.
In size.
Yep.
But perhaps, I mean, obviously
perhaps it's not.
Perhaps it's not.
But yeah.
So this is why it's so important that your realtor is in constant communication with your lender.
Yeah.
Because your realtor needs to know your goals and what the parameters or the checklist for what your loan is going to approve. And then I as the realtor or the other realtor needs to send this information over to a lender like Amanda and say, hey, what do you think is going on with this property? Do you think it's going to be worth our time to go look at it? And how about the loan policy? What are we looking at here? So my next question is, how is someone in Sandusky proper or Vermilion proper, if they don't qualify for the USDA loan, that means that they don't qualify for down payment assistance?
Not necessarily.
Okay, so tell us.
So they could qualify for down payment assistance. So there's OFA, which is Ohio Housing Financing Agency. They have a down payment assistance program. You can do FHA, VA, conventional, and you can even do USDA, but I wouldn't pair that with USDA because USDA has a little better rates. OFA sets their own rates, so we have nothing to say about that, but it can be used. So you can get 3% or 3.5% down payment assistance with these programs. So there are those options. And then Union Home has UHM Home Start, which is also a down payment assistance that does not have any kind of income caps or anything like that. It actually follows FHA guidelines, which is pretty amazing. The downfall to that is it does have a second attached to it for the down payment assistance. So you are paying back that loan, whereas with OFA, you don't have to pay it back, the down payment assistance loan. As long as you live in the property for 7 years, it's forgiven.